All right, what's going on, guys? Welcome to the first episode of the Smart Money Show. My name is Moayad, and I'm here joined with the FU mentors, Kieran and Debraj. In today's topic, we are just going to be discussing basically our story on how we got into trading, how we transitioned basically from retail trading to smart money, and all that good stuff. So personally, I started trading around 3 to 4 years ago, just about to hit that 4-year mark. And I started my first year basically trading with retail, actually 2 years retail trading. And then I started trading with smart money. Now, I spent my first year, I believe, I joined IML. So a lot of you guys, you guys probably have like experiences and stories with MLM groups. But I joined IML, and the thing about MLMs now, I don't like to speak bad about any companies or anything like that, because let me be honest, like if you get into the right group, you actually learn a lot, you know. But the thing is, with those guys, they have a side where they just like to build. And with the building part of it, you know, it's like they're pushing you every single time. Instead of doing a Zoom call, you know, for like how to learn about institutional candles or whatever it is, these guys are pushing you to do a Zoom call on like how to better present yourself and stuff like that. To be honest with you, like you actually learn a lot from this, because this is actually where I learned a lot of my confidence. Because before I started teaching or like educating or anything like that, I would hop right in front of a camera, and it's tough. Like you freeze, you know, you don't know what to talk about, because whereas like a podcast now, or like having a Zoom call with a lot of other people is easy, because like I'm saying something, someone else is saying something back, so you kind of can keep it going. But with a YouTube video, it's very, very like it's really, really hard, because you're talking to yourself for like 10-15 minutes straight, you know, so it's really, really tough. But with these MLM groups, like you do learn a lot, let's be honest. But after that, obviously, I went ahead, started FU signals. So I was providing FU signals, just basically smart money signals. And then slowly after that, guys, we were building. I came out with my smart money course version number 1. And then I came out with version number 2. And then we switched actually from FU signals to FU Academy. And slowly we're growing. So then we got some mentors as well on board with us. So I have Kieran. He's a smart money chart specialist in our group. And we also have Debraj. He does the order flow. So I'm going to let you guys there introduce yourselves. And yeah, Kieran, go ahead.
Yeah, hi guys, I'm Kieran. I've been trading since probably about January last year. I first got into stock trading just out a bit of interest, obviously with COVID and everything. That added a bit of help for getting into everything. Stocks and Forex, I just got into the whole thing, just trying to see what I could do at the time. Obviously, at the time, it was a bit crazy time, so did lose a bit at the time, wasn't really sure what I was doing. So it was good to join a group and just get into kind of the bit more structured and kind of learning and how to kind of actually trade with people and work together to just help each other, you know, make some money on the side.
You know, I want to interrupt you really quickly. Like, how did you find like doing Forex during that COVID period? Because I know that period, like it was really, really good for some people. So like some people were making some crazy amounts, because at the end of the day, like that market at that time was very, very volatile. So you're either making a lot or you're losing a lot. So during your learning period, how was it like, you know?
Well, the thing is, when the first crash actually happened, I was mainly paper trading. So mainly just kind of seeing what the market was doing. So I wasn't actually trading during the crash or anything like that. I was just kind of watching, seeing what was happening. And then I started buying stuff like Tesla. That was one of my main kind of purchases that I bought kind of March, April time last year. Obviously, that kind of helped me a lot throughout that year in terms of stocks. But Forex, similar situation, mainly just paper trading. Kind of wasn't really into Forex as much at the time. It was mainly stocks. But I did move over to Forex, and that is my main avenue now. Just I enjoyed it a lot more. It just gives me a lot more freedom, a lot more time. You know, the trading aspect of it is a bit more interesting. Stocks I prefer to invest in nowadays, to be honest. Just because of what it can do for you in the longer term. So
even cryptos are also good assets these days.
Cryptos,
Oh yeah, for sure. Like I mean, the move today was crazy. It was crazy.
About 16% on Bitcoin. Yeah, it's crazy, wasn't it?
Yeah, I was watching that 1 hour candle just like absolutely melt, you know, it was going down. It was literally going down like 1K, 2K, 3K, and it was crazy, you know.
Yeah.
I don't know why my mic is acting up here.
I think it's down about 8% today now, to be honest. So if you did get a buy around 15, 16%, I managed to get a buy around 15% down. So I'm up about 7%, which isn't too bad.
Yeah.
Hopefully a couple of people in the group, I think, might have caught a buy as well. So it was pretty decent, actually.
Yeah, you're able. I mean, like with these drops, it's actually so easy to even trade them because most of the time, right after a drop, you usually get that reaction straight away. Because when you look at what Bitcoin did today, it actually took like a lot of areas of liquidity, and then it went from like 42, 43K straight away back up to 47K. So, like that's a pretty good return on investment, you know. So that was pretty sick.
Was very nice. Yeah.
Yeah. So, the Brad, I want to ask you, like, with your retail to smart money transition, what was it like? Now I know obviously Kieran, he got straight into smart money, so that experience is obviously going to be a bit different. You have obviously two different type of people: the person that jumps straight into the markets and they're learning smart money, and then there's the person that has to unlearn all of that retail stuff that they were taught, and then they have to kind of look at it from a smart money perspective. And you're doing you're literally doing the exact opposite from what you're doing from the retail trading aspect, you know. So how did you find that?
Yeah, sometimes I see this as a plus point when you have retail knowledge also with you, because when you know the retail knowledge, and then you also know then where they normally fail. So when you transfer to smart money, when you switch to smart money, then also you know the drawbacks of retail traders. What I used to think at that time when I was a retail trader. So actually my trading journey started 2017, yeah, almost 4 years back. And then when at that time I took a course, I remember $250 course I took from someone, I don't remember.
Wow.
And and that guy was teaching me RSI and two moving averages. So I was pretty, this is the holy grail sim. So I was practicing, then I see, oh no, it's not the way, I think. Yeah,
Yeah.
then eventually after 1.5 or 2 years, even I've been introduced to smart money. Then I see that, yeah, maybe this is the one technique to go.
Yeah.
And
And you feel like were you successful trading retail? Because like when I talk to a lot of these people that have like made the move over, a lot of them like they were still making money with retail strategies. It just kind of wasn't. It just wasn't what they wanted, because like with the smart money strategy, usually what you'll see is, especially nowadays, what people are doing is they're able to catch these like much bigger risk reward trades, you know, and people kind of get enticed with that small stop loss sniper entry type thing when you hear people talking about smart money. So how was your transition from retail to smart money in that perspective?
yeah, I was also greedy actually when I was seeing those smart money guys are getting
Oh yeah.
1:5, 1:10 easily RR. So yeah, that time I was also thinking that yeah, these are great things to try out. And eventually I think this is really, they call smart money because the technique is really smart enough.
I'm having some technical difficulties with my mic for some reason. It's not staying in place. half of this podcast I'm just trying to fix it, but
yeah, and with order flow, when we introduce order flow, then yeah, we got more confluences. So yeah, that's also a part of smartest money, I can say. It's also a thing. Yeah.
Like order flow was really interesting. Like when you introduced that to me like a year back, I think like with smart money, the thing with smart money these days is a lot of people are getting into it. It's become a pretty saturated market. Like you can look on YouTube right now, look up smart money trading, and you'll have tons of videos uploaded there, whereas literally 1 year ago it was only like a very, very few amount of us educators basically uploading on that topic, you know. So it was a big deal back then. Now I feel as well is like the strategy is kind of changing a bit, not really changing, but the way people are doing it, the style has definitely changed. Because like, for example, I remember when we were trading smart money, when I even was learning it, we were trading those higher time frame setups. No one would discuss the 1 minute time frame. No one would discuss the 15-second time frame. And like for me to like, even now, it's a thing where like you know how to trade those time frames, right? But it's a thing that you just don't really want to touch them. You know what I mean? Yeah, that's just something that I personally like prefer to stay away from.
Yeah, I honestly 100% agree. Like the 1 minute time frame, it's not my type of thing. Honestly, I prefer to trade on a little bit higher time frame. At least the 1 hour for me is got to be. I at least like a bit of time on my own for the day. You know, I'm not trying to be stuck at the charts 24/7. Fair play to those who can do it. It's just not really my thing. I'm trying to get, a decent entry point, decent RR. That's all I'm really worried about. I'm not trying to get this 1-2 pip stop loss. To be honest, at the end of the day, a win's a win, a loss is a loss. So the RR is all that
Yes.
matters at the end of the day. You know, if you manage to get 10 pips of a 1 pip stop loss, fair play. But it's just not really my thing, especially how quickly these markets move nowadays. Liquidity, you can just be taken out so easily with anything that happens, especially news as well. When that comes out, if you don't keep on top of that, it just takes you out instantly. So you have to be, in the zone and just so concentrated when you're trading.
Exactly.
1-2 pip stop loss is just mental. Not really my thing, but fair play, like I said.
Yeah, exactly. Like fair play. If that type of thing kind of works for you, then go ahead, do it, whatever it is. But I feel like it causes a stigma as well for people that, like, especially new people coming into smart money. They see everyone doing this, like 15-second entry, 30-second entry, and they feel the need that that's the only way to do it, whereas it's not, like the higher time frames, as you said, like the higher time frames is much easier, especially if you're like a busy type of person. Because for me, I hate sitting 24/7 at the charts. I've done enough of that. I've done enough 4-hour all night grinds, all of that stuff, to the point where my eyes, like, I can't even, like, I'm very, very short-sighted because of sitting on the computer all the time, So these days what I'm trying to do is trying to really, really minimize my screen time, So what I'm trying to do is wake up, analyze these higher time frame charts, etc. Usually I probably have like a good idea of it anyways, especially if you're looking at it every day. You don't have to look at the like weekly time frame, for example, every single day. So I usually have my analysis done anyways at the start of the week, the higher time frame analysis. And then usually what I like to do is drop down to my 4-hour time frame, mark out those institutional candles, same with the 1-hour time frame, and then just set buy and sell limits. Simple as that. Obviously if I was at the chart, or if I was at my PC, then I'll definitely market execute. But it's a thing where I don't like staying in front of the computer anymore. I'd rather go to the gym. I'd rather go outside, take a walk, do whatever, travel here, go to the city, meet up with friends, so this is the thing. This is the kind of limitation that I feel those smaller time frames have on you. It's not to say that you're going to be sitting on your computer every single day, 24/7. It's just, you definitely have to monitor your trade much more. You know what I mean? So, yeah, that's that.
100%, yeah. I especially with like your point about setting limits and market orders. The problem I find with market orders, especially if you're taking a trade off the 50% of an IC or something, if it touches it and you don't think it's about to get there, and maybe you get a little bit of FOMO, you're like, okay, I need to get into this trade. Then your kind of rules go out the window a little bit, because you're like, okay, well, it's 1-2 pips away, and then it ends up going to the 50% anyway. At the end of the day, setting the limits is, you're sticking to your rules and you're sticking for that purpose. So I do definitely prefer it. And like Mo said, you don't have to be at the charts all day. You can go out and do what you want. It's just so preferable to me. Like I said, if you are deciding to market execute, fair enough. Especially if you want to do it based off confirmations. I know some people do it off like breaks of structures and things, or maybe even if the order flow confirmation's there. I mean, fair enough, I guess, if you're looking at the market at the time. But generally for me, if my limit's set there, I've already done all the analysis beforehand. That means, I found my reasons for the trade anyway. So, if it goes against me, then that's just a loss at the end of the day. I'll just take the loss and move on to the next one. So,
yeah, exactly. And like what you're talking about as well, like gives me thoughts, because like I think about it with my usually like sell limit and buy limit orders, there is much less emotion involved in your trading, because you're just not there to see it happen, You're not there to see that stop loss get hit. You're not there to see that entry get hit most of the time, unless you're stuck in your MT4 24/7, But most of the time, you're not there to see it happen. And I mean, when I think about it, if I actually quantified and went on and made an Excel sheet about regarding like all of my profit and loss kind of history, my wins and losses, I can definitely tell you that my market executions probably had more losses than my limit trades. And I mean, like, with my losses, what market execution, it was crazy because especially when I started, the way I was viewing the market was, it was crazy. Like the view I had on money, my relationship with money in general was very, very unhealthy. So like when I was looking at my MT4 and I was seeing like, okay, there was like 3K in my account or there was 4K in my account. What I was seeing there was literally 3000. It did not occur to me that this was actually 3,000 euros or 4,000 euros, you know? And I was placing absolutely guess trades. Like I know some people, they'll have an analysis or they'll have a few confirmations, whatever it is. It got to the point for me, especially at the start. And this was even like at the start of my smart money journey, let me not lie, because a lot of people, they think that just because you make that retail switch over to smart money, then you suddenly become like a really good trader and you start become profitable. No, you'll still always have that mental obstacle no matter what strategy you're trading, you know? So like, as I said, I reached the point where I was just like placing trades, even though I know my smart money setup, I should be looking for like this institutional candle, then look for an imbalance, then look for a break of structure, whatever it is. I wasn't doing that at all. I would do that once, lose, and in that same day, I would literally risk, what is it like? I remember one time, this time actually stuck with me because I remember after losing that trade and blowing that account, I actually started crying that day. You know, it was crazy. I genuinely started crying. I broke down. I was like, what am I doing? Because I can see myself make the mistake, but it's like, I can't stop myself, you know? And it really gets to that point, like that toxic point where I see myself making those mistakes, but I can't stop myself. So like, I remember it was a 1K account. And I believe I dropped two standards. I dropped two standard lots on a 1K account. Now you can only imagine that was for every 10 pips, that was, my maths is bad here. So for every 10 pips of the account, I was literally going to either be making 20% or losing 20%. Now imagine risking 20% on a trade. So, and the funny thing, yeah, you know, and the funny thing is with that trade, I didn't even have like analysis in mind. Like that was just a guess trade. I just clicked to sell, and I remember exactly it was GBP AUD. I clicked to sell on that, and whoa, like that was one of my worst nightmare of days because I was just watching, and it was crazy because I was losing like 200, 300, 400, 500 euro per trade, and there was no kind of feelings towards the money, you know. And to be honest with you, let me not lie, I blew like a lot of accounts, you know. I was doing that for a while, just didn't really care about the money, until one day I actually like withdrew kind of a large amount. So I literally just like withdrew 1,000 euro in my hand, and I looked at it and I was like, wow, like all these 50 euro notes, every single time I take a trade that's like 400 euro loss or 500 euro loss, and it's like a stupid trade, like a revenge trade or whatever it is, then I'm literally taking that money and just like throwing that in the bin. And it hurt me when I was seeing that physical money and I threw it away. It hurt me. I was like, shit, like I need to stop. You know what I mean? And that didn't change until I lost around 10K. Now, I mean, for a lot of people, 10K is not that much. Let's be honest. It's not that much now. And I know people like have lost 20, 30, 40K. Let's be honest about that. But 10K back then when I was young and I had like pretty much no sources of income. I had no job. I believe I was working like a pet shop or something. So I had no job. So 10K was a crazy amount to lose, you know. But like I want to ask you guys as well, like what were your experiences with losses? How did you cope with them? Because I feel like losses, there's like a shame factor. And a lot of people don't like to talk about it. They're only talking about their wins. They're not talking about their losses. So yeah, what are your guys' experiences with that?
Yeah, it was probably within the first couple of months of trading. It's probably about July time. I'd already had a couple of losses in my stock trading that had like a 60-70% loss on one of my trades in that. So that was already, you know, a bit of a crazy one, just holding it, and it just wasn't going my way. It just kept holding, thinking it was going to go magically my way, and it just didn't. But you know, in Forex, even worse, to be honest, I had one day. I remember it clear as day last year. It was like last summer, last June I think it was, and I placed a trade on gold, and it was only a £100 or £200 account. So you know, obviously trading on gold on a small account isn't always the best idea, and it must have been a decent size because I'd lost like 60% of the account in just one trade. Like I wasn't looking at it. I didn't have a stop loss. I just blew it. And I was just like, I've just lost like 60% of my account. What's just happened? And then I just placed another trade on it and made all my money back. And I was just like, I've just made the stupidest win of my life. Like I just made all my money back, and I was just like, right, I will never do this again. Like sometimes you just need that wake up call, whether it's a win or a loss, just to just to realize, like, what am I actually doing? Like that loss to me, where I lost like 60% and then made it back. I was just like, I shouldn't have made that money back. That money should have been gone out my account. Like I got it out of luck, complete luck, that I got my account back to break even. But you know, so like I said, sometimes it's just that loss or that one trade that just kind of kicks you a bit, just to kind of be like, what are you actually doing with your trading?
Yeah, that click kind of comes in.
Exactly. And maybe it's something you need to do with your learning or with your emotions or stuff like that. For me, at the time, it was emotions and my patience. Some I've had to work on. And like I said, it's just that click. It's just that one loss or one trade that just actually kicks you in the arse. And sometimes it's good. Some people don't have that experience, but I do think it does help you a lot if you do have the experience. Everyone does lose in trading, and if you do get a bad loss, don't go cry about it. Obviously, if you are sad about it, fair enough. But it's just good to learn from. Regardless, just learn what you're actually doing, think about it, and kind of try to learn from it the best that you can, because that's just going to benefit you the most, in my opinion. So.
Yeah, it's a part of.
And the thing is, like, everyone has their kind of everyone kind of has like that pain threshold. So like some people are okay with losing 100, 200 pounds, whereas to some people, like, that's a crazy amount. You know what I mean? Yeah. So it's all really subjective to the person, like how you were brought up, what's your relationship with money in general. So it all kind of leads back to like your personality and stuff like that. You know what I mean? The Brad is just like listening to us right now. He's just being quiet. He's like, yeah, these guys are two idiots. But I wonder if the Brad kind of made the same mistakes as us, or like.
Yeah, I think I have. I've blown 6 or 7 accounts. Yes, true. That's also. But yeah, then eventually I learned one thing, that before placing a trade, you ask yourself, is it a $1 million trade? If you have $1 million, would you be putting $1 million in this trade? Then you should. If it is not that perfect or proper trade, then you should stay away of this trade. So like that, I started building my mentality, and then I saw that things getting improved slowly.
Fair play.
That's true.
Mo, how many accounts have you blown in total then?
Yeah, total 6 or 7, I think I say.
Guys, I know for a fact, let me be honest, I know for a fact that I've definitely blown more than you guys put together. Like, I have blown probably...
That's probably true. If he's blown 6 or 7.
12, 13.
Wow.
Like, it was a lot. I mean, you can consider like the 100, 200 euro accounts as well. You can consider them blown. But like when I'm talking like big amounts, it would be like in the thousands, it would probably be like only like 3 or 4 times. Okay. So it depends on the way you look at it, you know. But after that, I'd like took a really, really long break from trading. Because you can only imagine kind of the mental toll that after realizing like I was just throwing away this money, and like this is something that you'll only ever see, like that kind of feeling. You'll only ever kind of feel that in gambling. You know what I mean?
100%.
With a gambling addiction. But like in another business, you wouldn't actually have that type of thing. Like, for example, if I lost money on crypto, for example, I invested in like a meme coin. I didn't really invest, I just put money into it. But it was called Pokemon. So I put in like 1,000 euros into that. It's like a Pokemon coin, but it's funny. But I put like 1,000 euros into that like a few months ago. So that it was doing crazy. Like the gains, I know someone took, I know actually Momofx, I watched one of his videos on it, and he took his account from like 2K to 66K or something like that. It was crazy percentage. Like it was crazy percentage. And I'm sure I sent in like something about that meme coin anyways into the mentors chat when I was talking to you guys. You guys probably heard me talk about it before. But I don't know. This was recent, but it was a thing where I was like, let me just put some money into it, you know. I did my kind of research on it. It wasn't really like a gambler, I guess. I did my research on it. And you know, obviously with crypto, it's like a set of things that you always have to look for when you're approaching each coin, you know, or each crypto. to kind of analyze if it's good or not. And let's be honest, like it has a good team behind it. It looked pretty promising. So that was doing kind of well for a while. And then out of nowhere, once we had that, like, not crash, but once we had that like down period for the past 3 to 4 months, that kind of like died down with all the cryptos. And I only have like €100 left in that account. So it's a thing where like with Forex, because I was kind of throwing that money away, I felt sad, you know, it hit me. But when you actually like invest money that you know you can afford to lose, it doesn't matter. Like that 1K, I think about it. Yeah, like it's pretty shit to lose that amount of money. All right, let's be honest. But I kind of knew that there was a potential to lose it. You know, you have that expectation. So, you know, it wasn't that bad.
I think it's the same with trading accounts. So, you know, when you put that, you know, £100, 1K, 10K in the account, you've got to think that, you know, it's not there anymore. You know, it could just go. It could, you know, your account could get blown. Don't think about the fact that, oh, you know, I'm losing a little bit of money. You just got to think, okay, the 10K's in the account. If I make money, I make money. If I lose it, I lose it. You know, you just can't get stressed over these things. You know, never put in money either that you can't afford to put in as well. You know,
Exactly.
I've made a silly mistake doing that in the past. It was only a small amount, but I've done that and regretted it. But the thing is, though, you know, also it's just so important, honestly, just to keep the money in there that you can afford to do, because it can really affect you, especially mentally as well. You know, you're trying to keep your emotions in check, and if you can't pay your rent, you know, or if you're putting your rent money in, I know some people are putting rent money in like crypto and stuff, like hoping for that 100%. You know, it's just not worth it. You know, just put that, like I said, money in that you actually can afford to. So because for me, I've only go on.
Yeah, no, go ahead.
Yeah, so for me, I've only blown like one account, so it's not been too bad for me personally. It's only a small one. It's about £200, just right when I started. You know, I clearly deserved it, like I said, for the fact that I lost so much on gold in one trade. Wasn't really thinking, but you know, now it's just about building up an account. That's what I've been mainly focusing on. It's just worked for me the best. You know, certain things work for other people. Some people prefer to go with like funding companies. Some people prefer to build smaller accounts. I've just been building on it and adding as I go along with money that I can afford. So that's generally what's worked for me best. So.
Yeah, honestly, like as you said, that's the best way. Compound slowly, bit by bit, you know. And it's nice to see that you had that. As I said, you had that click earlier on in your like trading career, basically. Because I know, like someone like me, I wish I had that click earlier on, you know, because like
even me
it
also.
took like. Yeah. You know, like it took like a year or two to start clicking in. So you're definitely lucky in that sense that you copped on earlier enough. It just shows that you had a good mentality coming in, whereas when I came into Forex, that mentality was very, very different from my mentality now, like, because doing this business in general, like, it has a crazy mental toll on you, and it can either build you to become a crazy good person, you know, like a very, very strong person, or it can break you. And the sad thing is, like, I've noticed it, you know, like over the years teaching people, like a lot of people confide in you, you know, like they tell you about this, they tell you about that, they tell you about this is how, like, they can't even pay their rent sometimes, or this and that. And I look at them and I can see the desperation, but there's not much I can do at the end of the day, you know, other than just being able to help them, being able to guide them, give them that warning. But at the end of the day, like, everyone's an adult, they kind of are entitled to just do what they want with their own money, just as long as you advise them, you try guide them to the best of your capability, but like, you can't really force them. So yeah, it's sad, you know, because I know for a fact that coming into this business and trying to make this your only source of, like, income or profit, whatever is basically, the only source of money that you have, it's difficult. Like, very, very few people are actually able to work and keep their mindset strong in that type of scenario, you know. So it definitely is tough, you know.
Yeah, I think the main thing about Forex is going into it, especially, is you can't rely on it. You know, you can't say, okay, I'm going to make this much off it, because you never know, to be honest. You know, it's like Mo said about your mentality. You just got to think, okay, this could be a thing in the future. I'm just going to build on it and work on it as I can. The thing is, I do stuff on the side. I do other things as well. You know, Forex is a side thing for me. I just, like I said, I'm compounding my account. I'm not completely reliant on it. I'm happy just taking my gains as I go along and just making money. That's all I'm really worried about at the moment, and just building that account. because once I become, reliant on it, it's a whole nother story. I think there's just, like I said, you've got to have that mentality and that emotion to, completely rely on it. So it is best to just go into it and just say, okay, it would be nice to make some money, but what I'm going to do for now is just build my account as I can slowly. 5 to 10% a month is achievable, and it's just what you can work towards each month. Just compounding your account and just grow it over time. People go to uni for 4 years, 5 years, whatever. Some people go for up to 7 years. Forex is a similar thing. You can't learn it within 6 months. It doesn't take 6 months. It takes longer than that. It takes time to build on your mentality. It takes time to build on your trading, your skills, and just hone everything in together to actually help you with that. And that's what will come over time. So it's definitely worth, like Mo said, coming to Forex, just understanding what it actually is, and starting off as something on the side, not becoming, okay, I'm going to make £1 million doing this, because that's just going to go into your head wrong straight from the start.
Yeah, I was saying that everyone has got the same same goal, that okay, we have to earn huge money from the Forex, but reality is something different actually, because every day, every month, strategy can, like, you can't solely rely on this income unless you are very, very good into this. So
100%. And it's definitely a thing where, like, you see, with the thing with the Forex industry in general, it's I don't know how to put it into words, but it's like seeing all of these people, like, for example, these people post their wins. It gives you the expectation that, like, you should be up to them all the time. You're trying to compare yourself all the time. For example, like looking at all these guys on Instagram, showing off their Lamborghinis or whatever. Once again, you're trying to compare yourself to these guys. You're trying to set these guys as your goal, whereas everyone's goal is completely different. And I feel like that's actually something that I want to, like, touch base on. Something that we'll definitely discuss in, like, another episode: goal setting. Goal setting is huge in every single part of your life, and not just Forex. Like, literally, as I said, in any single part of your life, any aspect of it, goal setting is very, very important. So I feel like when you're approaching this market in general, when you're approaching, like, your career, you shouldn't have like that goal of being, like, financially free, or having that Lamborghini, or having that mansion as your number one goal. You should slowly build up to it. So, like, your first goal, for example, should be nailing down technical analysis, like how to spot the institutional candles, the setups, just nailing down a certain part. And then your second goal should be like nailing down the fundamental aspect, okay, understanding the economics more. Then, like, your third goal should be nailing down, like, your emotions. Okay, that's obviously something that you're not going to nail down 100%. Let's be honest. No one can actually stop their emotions completely and just become dead when they're trading. But what we can do is we can limit it. We can kind of hold it in and be in control. That's the most important thing, And then after that, slowly, after you kind of complete these objective goals, then you can slowly, like, set those monetary goals that you want, or those, like, percentage goals, whatever it is. So people, they kind of instantly have those monetary goals and those percentage goals, and basically the result. Okay, they're always looking at the results, but they're forgetting all about that kind of process of getting there. And that's kind of the thing that people really, really need to be careful of, because it can really cloud. It can really, like, cloud your the way that you approach this market in general. And yeah, that's something that you got to be careful of.
Yeah, I think you've always got to have a positive attitude to the market. The problem is you just got to take what you can sometimes. During summer especially, we've just seen it this year. It's been a bit crap at times. Last month especially, it hasn't been a whole lot of movement in the market. Hasn't been the best opportunities. Happened last year as well. Happens over Christmas, and people become, like I said, if you're a bit trying to rely on these markets and this type of trading, and then you try to take on summer, you might have these unrealistic expectations to make this type of money, and you're only managing to make 10, 20 pips during the summer as well. So it does become a bit unrealistic at times when you are trying to, make that £1 million, but you're only able to make 10, 20 pips during the summer. So.
Yeah, and, like, one more point I wanted to add is, actually, I love these Instagram guys, who post their big, rich lifestyles with Lamborghini and these things, because these are the things which attracts more people in Forex. And for good traders, it's better that more people participate in Forex, so that we can take money from those who are, who thinks like that. So it's also a good point for us that, okay, let them
More
join and
liquidity.
let them impress the fools. Actually.
A very, very evil perspective.
No.
No, it's just other way
But
around,
it is
because
true.
yeah,
It
it's
is.
true. It's true.
Yeah, it's 100% true, you know? And like, let's be honest with ourselves. Like, that is our goal at the end of the day. Like, you need to have an incentive. Like, for me, if it wasn't for that factor of being able to eventually buy those cars or be able to eventually get my own house or whatever it is, then do I really think that I would, I would spend like all those times on the charts, doing all this analysis, putting so much effort. So let's be like, if we all are trying to be realistic with each other, right? Then there always is that kind of there always is that kind of thought at the back of your head that is the
Wish,
goal.
dream, yeah.
Exactly, because if you don't have a dream, if you don't have a goal, then what am I exactly looking forward to? Like if Forex was like a kind of like a job and it was only making 50K, 60K, even 100K a year, I personally still think that I wouldn't do it. It's the attractive feature of it is that it's limitless. You can make
Yes.
as much money as you want to make.
Yes,
That's the
exactly.
beauty, and that's what attracts people.
And it's all down
and that's
to
what
you.
makes. Exactly, and that kind of what makes those goals become very, very realistic in comparison with like having a job, because you're just gonna have to save. But at the same time, yes, it makes those goals very, very realistic. But at the same time, it makes it unrealistic to the fact where people think, yeah, I can make any money I want, but now they're thinking that like I should be making this money right now, which is what they're getting confused. You should be slowly pacing yourself, because if you're starting like, for example, you're running a race. If you're trying to run a marathon, if you're starting at the start full speed, what's going to happen? You're going to gas yourself. You're going to lose the race, right? But if you start slowly, you build up the pace slowly, you're going to reach your goal. So it's all about that process. And yeah, I feel like so many people, they focus on the end. A few people focus on the start. Very, very few people focus on the process, and that's something that always we need to highlight as educators,
It's all about the process, honestly. You can get there in the end, but the main thing that makes you what you are as a trader, as a person in general, is the process and what you actually go through. The effort you put in will show, as if you're successful. If you put in that time, when you're not at work, when you're not studying or doing the extra stuff you do, it will show with your account gains and your account growing over time. And like I said, the compounding account, you can just build that over time while you're doing other stuff. You just keep working on it, and that will show over time. It's just like anything. You work in the gym, 1-2 years it will show, and you study 1 to 2 years it will show as well. It's just the same in Forex. You just got to put your time into it and just keep going. Even if you're not making money right now, it doesn't matter. It will happen in the future if you do put that time in, if you do put that effort in. And it's like Mo said, it's limitless. And that's what is so appealing about Forex, in the first place, as to why people would join. And it's like him said, though, just make sure that your goals in the first place or early on are a little bit more realistic to start off with. And then you can look more in the future to get in those nice flashy cars and things like that. So.
Yeah. And I can clearly tell that it makes you very happy when you talk about it.
Yeah.
All your smiles. To be honest, like we would be lying to ourselves if we say like, yeah, this is not what I'm doing it for. Because let's be honest, that's what you're doing it for. Whether like everyone obviously is going to have their reasoning. Some people like want to bring their family to like a higher spectrum, a higher level, whatever it is. Because at the end of the day, everyone has their own background, everyone has their own reason. But the goal is always going to be monetary. It's always going to be financial, You're not doing Forex to become a better person or stuff like that. So yeah, it's okay to be realistic with yourself, but it's all about that self-awareness. And that's something that like I want to really, really discuss a lot in these podcasts, in the other episodes, as all of us know, basically, this was just like an introduction. So I just wanted to introduce us, so you guys can kind of understand a bit about who we are, about who you guys are actually listening to every day, about who Momofx is that you're seeing, watching on YouTube all the time. about who our mentors are on the About Us page of our fuacademy.io website. So it's good to be able to kind of connect with us. I literally forgot my point that I was speaking about literally a second ago. But as I said, in this, in our episodes and podcasts, I kind of want to not just touch base on, trading smart money. I want to discuss psychology, things that affect you mentally when it comes to trading. Okay, obviously I want to keep it trading appropriate, but I want to discuss all these things, different stories, stuff like that, because honestly, I feel like a lot of us, we really, really discuss the technical aspect a lot, and we never actually get to sit down and talk about our different stories, because literally there's things that, for example, I've been working with Braj and Kieran for a very, very long time. But even on these podcasts, you actually learn a lot about the other person. And even you guys as listeners, you're learning from everyone else's experience, because, for example, you're learning about how I was treating money a certain way. So now next time when you not think about it, but when you kind of approach that experience, you can kind of think back and say okay, yeah, I was listening to this guy before on a podcast and he was speaking about how he was getting those feelings towards this, and in the end this is what happened, and you guys can kind of become more aware of it. So honestly, I believe these episodes, these podcasts, it's something that is really, really great, but yeah, I believe that we are running out of time, guys. Yeah, I don't want to take too much of the Braj's time. I believe that he wants to sleep in a second. Yeah. So I'll leave him here.
Yeah, okay.
He's ready in bed already. So yeah.
But we enjoyed this one. We enjoyed this one very much. Yes.
Yeah, for sure. As I said, in the future, guys, I want to be bringing on a lot of guests. We're going to be discussing lots and lots of different topics. Bring on some really, really crazy good guests. And yeah, it's only going to get better from here. This was our intro episode. Hopefully we did good, guys. But yeah, we'll definitely improve as we go on. So yeah, I appreciate every single one of you guys for listening, and we'll catch you guys on episode number 2. Have a good day or night wherever you are.
Yeah, bye.